Hello, before we start today's video, just a quick note that if you are interested in purchasing this indicator, just simply email us at daytradinggps@gmail.com to request a discount promo code. In return for you taking your time for watching this video today, you can email us and request a discount promo code that will give you a substantial discount on the purchase of the indicator. All of our indicators are sold on a one payment for lifetime access basis. Thank you. One more thing before we get started, you'll see in the description of the video there will be this section here, which is click on this link for descriptions, links to the other videos mentioned in this preview on different topics about the SPX indicator. So this is a Google Drive link. I'll show you where it takes you to now. So when you click on that link for the Google Drive, this is where it takes you to, which as you'll see is a list of different topics and links to the videos on the specific topics. These topics go into more detail. We may reference some of these topics very briefly in today's video, but when we reference to go look at the video that provides more details, then you'll just simply click on this link and go to here, and then you'll be able to click on the link that you want to see a more detailed video on a certain topic. Thank you. Okay, so before we start today's video, I just want to apologize. I have the flu at the moment, so I apologize for my voice sounding off. Also, this video is going to be a lot shorter video than we normally do, so it's going to be a condensed video. It's not going to go over a lot of the details on how the indicator works. So if you look in the description of this video, you'll see a video, a link to a video that's a general overview of this indicator and how it works. And then you'll also see links to other full SPX session videos in which we also go into more detail about how the indicator works. Thank you. Okay, here is the Monday, December 1st, 2025 trading session for SPX. We have the 9:30 a.m. candle here. You can see the 9:30 a.m. candle crosses below and closes below the BBKPL level today of 6804.49. So that is a bearish trade on the BBKPL level on the 9:30 a.m. candle, as it is still within the acceptable range. For that, the standard stop loss and a bearish entry on a trade from the BBKPL level is the first midpoint above the BBKPL. So that's the standard stop loss here. The tight stop loss on a bearish trade from the BBKPL level is the QL above BBKPL, which is this level here. The three different strikes that you can use on this particular bearish entry from the BBKPL. Standard play is the at the money put option. At the money meaning the closest strike to the BBKPL, 6804.49, which is the 6805. The price on the 9:30 a.m. candle close, the ask 1810. The next out of the money strike that you can consider is the first midpoint below. Since this is a bearish trade, we're looking below. First midpoint below 67.92.72. So the closest strike is the 67.95 put option. Price on the candle close, the ask $14. Furthest out of the money strike to consider is one full level down in the direction you're trading from the level you're trading from. In this case, bull bear KPL 67.80.94. That would be the 67.80 put option. The price on the candle close, the ask $9.40. In this particular opening trade, we're stopped out whether you were using the standard or the tight stop loss. So the tight stop loss was stopped out on the 9:34 a.m. candle here. So you have the prices on the 9:34 a.m. candle here for each one of these. So we're taking the worst possible stop out price. It's possible you could have gotten stopped out at a better price, but we're going with the worst case scenario. Worst case scenario on the 68.05 on the tight stop loss of $400. 67.95 put, $310. 67.80 put, lost $220. Next, 9:38, this wick hits the standard stop loss, this midpoint above. Here are all the ones for that. These are all the bid prices, by the way. So worst case scenario, low bid of this candle, $12, loss of $610 on the at the money 68.05, 67.95, loss of $490, 67.80, loss of $340. So depending on which stop loss you used, those would be the losses on that trade. The next trade is over here. I didn't really have enough room with the stuff here to put all the data boxes, so the next trade is over here, which is this. Either the 9:40 a.m. is the standard stop loss is the recommended stop loss to use. It's up to you whether you're going to use a tight stop loss or a standard stop loss, but in either case, the next entry is the 9:40 a.m. bull entry on this candle, which touches, crosses back above, and closes above the bull bear KPL. You could have also entered here if you wanted additional confirmation on the 9:44 a.m. bull entry. Standard stop loss in the bullish entry is just the reverse of the bearish trade that we had on the BBKPL. So on a bullish trade, it's the tight stop loss is the first QL below BBKPL, so it's the QL below the level you're trading. Standard stop loss, first midpoint below the level you're trading, in this case this level here. Standard play is the at the money meaning the closest strike to the BBKPL, since that's the level we're trading from. So in this case, 68.05 call option. Here we have these data boxes. The first two here, 68.05, 9:40 a.m. and 9:44 a.m. 9:40 a.m. These are all the ask prices. Candle close 1910, 9:40, or 1980 on the 9:44. Next, out of the money strike you can consider using, first midpoint above the level you're trading on a bullish trade. 68.16.27, so that's a 68.15 call option. Here we have the data boxes for those. Ask prices, close 13.6 on the 9:40, 14.10 on the 9:44. For this out of the money strike, you can consider on this trade from this level on a bullish trade, first full level above, 68.28.04, that's the 68.30 strike closest to that. Here we have data boxes for that, 7.30 on the close for the 9:40 or 7.60 on the close for the 9:44. Profit taking, scalp only, is a one level move in your favor, one level move in your favor, one level from this level you're taking the trade from, bullish trade, that's the R1. One level move required for scalp only, prices on candle close, profits based on 9:40 a.m. entries. 68.05 call on the candle close, $30.30, $1,120 profit. 68.15 call, $22.80, $920 profit. 68.30, $13.40, $610 profit. If instead you used a 9:40 a.m. entry instead, you paid a little bit more for any one of these, then just adjust the profit accordingly. 12:44 p.m. it hits the regular trade, minimum 1.5 level move for a regular trade. Again, the profit's based on 9:40 a.m. entry. 1.5 level move, that's the 1 level move, that's the 1.5 level move. 68.05 call, 36.70, profit of 1,760. 68.15 call, 27.20, $1,360 profit. 68.30 call, 14.50, $720 profit. If instead you used a 9:44 a.m. entry, then adjust these slightly less, since you paid slightly more on 9:44. Next, we have this note here. If you scalped the first bull entry here and you exited on the scalp, then you could have also taken this additional bullish trade entering here on either the 10:34 a.m. candle or the 10:36 a.m. candle. This is the 10:34 a.m. candle. This is the 10:36 a.m. candle. Touches, crosses back up, closes above. This candle is also within range. So these prices are based on the initial entry here, 10:34 a.m. These are the ask prices, 15.50 on the 68.05 call, since it's the exact same strikes we're using, since it's the exact same bull bear KPL level taking the trade from. 10.50 on the entry for the 68.15 on the 10:34 a.m. 68.30, $4.90. Now, since you did a scalp only, you'd be doing a scalp only again. Getting out on this candle, 10:52 a.m. candle here. The bid price, $28.60 on the close of that candle, $1,310 profit. 68.15, $20.80, that's $1,030 profit. 68.30 call, $11.20, $630 profit.